Hey guys, welcome to my channel. I hope you're good. So today I'll be teaching you how to avoid fake outs. Fake out can be a bit tricky to avoid, but I'm gonna teach you to avoid majority of them. I'm gonna teach you how to avoid a lot of them. So I'm gonna also give you a strategy of how I trade them, right? So one thing too, let's go to the charts. In fact, you know what? I'm not gonna use the chart. Let me just use this drawings because it will give you a better understanding of what I'm talking about. So you have a trend like this, right? So one thing to understand, obviously, you need to use multi time frame, right? So let's say you have a higher time frame, right, that is giving you these directions, higher highs, higher lows, right? You have something like this. And then in your trend, obviously you're looking for the buys. This is an uptrend, you're looking for the buys, right? So the issue is most of people, they go to a lower time frame. Most of traders, right? They go to a lower time frame and they draw a trend line. And then what happens to the price does this, right? And then when they see this, they enter the sells and the price resumes. Right? The reason is because of you are going against the trend. You are not wrong in terms of entering when it breaks, but the issue is you are against the trend, right? So you need to go to a higher time frame. When you go to a higher time frame, when you see this on a higher time frame, then on a smaller time frame, you're gonna come here. Let's say this is your higher time frame, right? I'm gonna draw on your lower time frame. You're looking for something like this, right? You're looking for this price going down, price going. You enter here when it breaks. Sorry, this is your entry, right? I'm gonna put this inside the higher time frame so that you can look at. You can be able to see what I'm talking about, right? You look for something like this, right? Let me enlarge so that you can understand what I'm talking about. You look for something like this on a higher time frame, then you get a breakout. You put your stop loss here, right behind where it started, and then until towards the end of it. So it depends on how the trend went. Sometimes you can have something that is bigger than this, like 1 2 3 reach through. What you can have something that is bigger than this. Sometimes you can have something like this. You can have a trend going like this. Then you can have sorry, I've used a wrong thingy. You can have a trend going like this, and then going down, and then put a big push to the upside, and then start having something like this, right? Then you start having something like this. So obviously on a smaller time frame, when you zoom in, when you zoom out, you're gonna be able to enter when you see this kind of breakout, right? When you see this kind of breakout, then that's where you enter, and then your TP right where you started, right? So it will depend on how the trend pushed, right? And this is your trend. This is your inner trend, right? So you're entering based on inner trends so that you can be able to be on the safe side in terms of direction. So the issue obviously is you as a trader not looking at a holistic picture, not looking at a bigger picture, not using a multi-time frame analysis, not using a higher time frame analysis. If you're on H1, at least go to up until daily or probably H4. Look at the direction, draw these trend lines, right? Then once you draw this trend line, then draw your inner trend line for breakout. You don't even have to draw this one at the bottom. You'll be focusing on the price breaking here. When the price breaks here, you buy, because why? You're going with the trend. You get what I'm saying? So to a smaller time frame, you're looking like you're going against the trend, because now in a lower time frame it looks like it's selling, But look at when you have a bigger picture on a bigger time frame, then you can be able to see that, okay, this is a trend, this is within the trend, this is within the buying trend. Then it breaks out, you know that it's not a fake out, right? It's a breakout. It resumes the direction. So to a smaller time frame, what happens? It starts a new direction. To a bigger time frame, what happens? It resumes the direction. Then what happens? You buy. Then you buy, and then you put your take profit right where the edge. Normally I use the edge of the wick of the candle, of the last candle before the trend went down or the trend was forming. So that's how I enter my trade. That's how I avoided a lot of fake outs. So if you use this strategy, you'll be able to improve and avoid a lot of fake outs. So yeah, that's it from Fakeouts, guys. If you're new to this channel, please don't forget to subscribe and also leave a comment for more videos. Thank you, guys.